Okay, I'm just starting my mid-afternoon video. I pull up CNBC to see what the markets are doing, and how ironic, right up here. Education Department announced the highest interest rates on federal student loans. It just went away in decades. I'm glad I caught that. So you could see the government now is increasing rates on student loans. Okay, so when you give something free away, it's not necessarily free. You have to get it somewhere. So what do? You increase rates on everybody else that has to pay and then push the rest of it on the taxpayer. I'm glad I was able to catch that. So in today's lesson, or this afternoon's lesson, I just want to start showing you guys how the pain is starting to set in from the Federal Reserve. So here's what we had not too long ago. Federal Chairman Powell says what they're going to do is going to bring pain to households and businesses, and it's starting to work. When was this taken? Well, it was back in August of 2022, so 2 years ago. Finally, we're starting to see cracks in the foundation. A lot of earnings reports, such as Starbucks, McDonald's, and those are starting to come down. Here's the scary part right through here: household debt. Now, people are just living on credit cards. This is going to come up and balloon in our faces, okay? And this is what we have to be mainly concerned is. And this is why the Federal Reserve is concerned as well. The delinquency factor on things. Now, before you go nuts on this thing, you have to look at and put it all in perspective, okay? Mortgage debt. People that are 3 months behind or more, it's less than 1%. So there's not going to be a flood of homes coming to the market because of foreclosures. And, it's more homes are needed to stabilize prices, maybe even bring them down, so there's more and more homes available for people. Now here's the I guess scary part right through here: credit card debt. Okay, but the people in most debt and having the most difficult time right now, Gen Zs right through here, saying most of them are maxed out. And it's going to hurt them. It's going to hurt everybody when this comes to fruition, because these people are going to have to file bankruptcy or do something. Maybe we just need our schools to be teach more economics, teach more of how to balance a checkbook, teach how to live within your means. Maybe that's just an idea. So on my show every day, I don't plead that you guys need to buy or have to buy a house. I'm just saying, if you're in a financial position to buy one and that's what you're looking to do, I'd love to help you. Okay, but if you're not, you're struggling with your bills and you're struggling with income and everything else, just continue to rent, work as hard as you can, and keep doing what you need to do. And maybe the government will continue to bail out a lot of people. So that's what we're seeing right now in the markets. Let's see if mortgage rates change. I don't know, for some reason they're not changing today. There they go. They just went down 0.01. What's the markets doing right now? MBS market is up 16. What you need to understand right through here is, and they're holding steady at 16. You can see the chart right now. It's just right across the board. We're waiting for tomorrow's CPI number. So the number out today was the PPI. The P in the beginning of that is for producer inflation. Tomorrow's we're going to get the CPI. C means consumer. So it's going to give us the consumer inflation numbers that we're going to see. That will be a game changer tomorrow. I think it's going to be a little different than what we saw today. I'm predicting just a little bit. I'm going to go out on a limb. I think the CPI is going to be just a smidget hotter than expected. And I don't know how the markets are going to react, because if you would have told me the PPI was going to double, I'd be like, it would be a complete bloodbath in the bond market and as well as the stock market. So we continue to see stocks holding on to their gains. Let's see over here what the market's doing on the live reports. So we have, I think the Dow Jones is down a little bit. Yeah, Dow Jones is down 16, S&P up 4, NASDAQ up 57. Crypto, I think, is getting plummeted or down 17 today. Let's look at oil. Oil is coming down real nice, down to 1.5%. That's going to help huge on the inflation front. And the 10-year Treasury is down below 4.5%. That's good news as well. So that's my report for this afternoon. Hope you got a little context in there, and hope you don't get too ticked off at me on complaining on how many people are spending money and what the government's doing with our money and how they're increasing rates on student loans and everything else. It's a disaster out there, folks. So try your best to get through it, and watch my videos on a daily basis. Maybe it'll cheer you up. Have a great day, folks. And if you haven't subscribed yet to my channel, please do so right over there. Take care. Have a fantastic day. Bye-bye.